Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your financial market update, and we are now on an active FOMC day for Wednesday, and this is the 3rd of May, 2017, and all the markets are closed. We'll be getting on to 5 p.m. shortly, and as you can see, a mixed day here, but after the market, we did see, of course, Tesla earnings are, its losses were bigger than expected. I think $1.33 versus an expected 87 cents. Facebook didn't look all that good either, and if you take a look, they're down about $4 in aftermarket trade. So we'll see how that weighs on the markets. A market that got annihilated today was the copper, and what really happened, I've looked into it all, the LME warehouse stocks saw a sudden increase of 32% more copper than they had. This is not totally uncommon. People move copper around at different times. Why it was all done at one swoop, I cannot tell you. But you add to that the combination of a fear of a slowdown in China with what's going on there, higher U.S. rates, it sounds like, from the Fed, a dollar that's stronger, and you had the recipe there for the market to get hurt. And while you see these nice settlements, then they're all down, they were sharply lower than this in the last 5 minutes of trade. Remember, in the metal markets, most of the settlements come in at 12:30 p.m. Central Daylight Time, 1:30 p.m. Eastern Time, and the markets trade from there another 3.5 hours. So you can't go always by where the market settled to say, you're going to open lower in the metals, is my point. When we take a look at the E-mini S&P, you're in a stall right here. For the week, you're still up 275 points, and you still have an up thrust. There's a bit of a gap right here on this chart. At any point, that can be filled. I'll show you that on the daily charts. The market is trying to just go sideways here, but a little more of a break, and we'll be having what we call a down thrust temporarily. Here's where that market might be headed. Let's call this gap the 2355 area. It's not far away. It's not a big area that you have to drop to. Approximately 26, 27 points will get you down there. You fill the gap. Charts often fill gaps. If they don't, and the market gets a gap above us, another area away from it, it's called a breakaway gap, and it's like you got a slingshot and you pull it and you let it go. The market can get really crazy on those. I'm not expecting that. I'm expecting more of a back and fill type market here. And I only say that not because I think it's going to happen, because you have lower highs, lower lows at work right now in the market. So the swing line is down until you take out 2388.75. That's only 6 points away. But even then, you would not start an uptrend. You'd have still the pattern of a lower low and then a higher high. So I still think the market's got a bit of a downside bias, I'll call that, from there. In terms of where is the general overall bias, it's up until you close up back under 2361. So I use that swing line to tell me what the current trend is, the short-term trend, but when it fights the 18-day average, fighting means it's pointing down, but the bias is up because you're over that 18-day average of closes, what I call that line in the sand. The two fight each other and they nullify each other. It just takes me completely out of the market in terms of what I think is going to happen. We can see that that area of the upper Bollinger Band did stop the advance and the market's backing off a bit from there. But we can also see this market's trying to embed. Now let me define embedding. Do you see how the slow stochastic study right here has one number, and I want you to look at it right there, 79.10. Both numbers are not over 80. The next day, both numbers are 80. That was Tuesday. The next day, which is today, both numbers are over 80. Tomorrow's the key. If both numbers close over 80, the market converts from being overbought to locking in a bull trend, according to momentum studies at least, and that often leads to a challenge of a high, possibly even back up to that upper Bollinger Band if the market can get the legs under it. I've seen when you embed and you don't get to an, and by the way, embedding can be in a bearish state. Doesn't mean you always fall to the lower band or the higher band, but it adds another dimension, a powerful one to a chart, probably the most powerful in my hierarchy of tools. When I take a look at the Dow right here, and this is the June Dow Jones, you've got the same pattern, lower highs, lower lows. It did manage to squeak out a higher close, but unlike the S&P, you're not even trying to embed. You're just plain overbought. Ideally, the market gets closer to or hits that 18-day average to regroup. That would be a nice look on that chart. In the NASDAQ, you've had the embedded reading, and you've been running against the upper Bollinger Band. It'll be interesting to see when the markets reopen tonight, the impact of Facebook on things. The tech stocks looking to me like they're a little vulnerable here after that run. But I don't think this bull market in stocks is over at all looking at the longer-term charts. They all still look quite bullish. The Russell's been the weakest of the lot, and it's now got it lower highs, lower lows. 1382.80 is the 18-day average of closes. Today's low, 1383.70. So you're coming into that support zone, but there's no reason to be long or short. Why? You're still over the 18-day average with the swing line down, nothing there. And in momentum, you're still overbought. You still have a reading at 73.12, as you can see right here. So you got an overbought market that still has to do more work. In the VIX, you're getting your embedded reading. Let's count days. Both numbers today are under 20. Yesterday, both numbers under 20, and on Monday, both numbers under 20. You have an embedded reading, which means I think the bears will be aggressive in selling the market and probably trying to sell it if the market starts breaking down. They don't have to be heroes picking always the upside. Wouldn't surprise me if they add to this market on the short side. If the market loses the embedded reading, let's assume that happens, because I try to show all sides here. That would be the red line closing over 20. Then I'm going to look for prices to get back first to the 100-day average. That could be a good resistance zone. If it can squeak by that, 1286, the 18-day average. If it goes up here, what happens in stocks? Stocks normally drop. So I think the bears have control, which means I'm still overall friendly in the stock market. In the bond market, a lot of disappointment hit this market, and I'm not sure what it means, and I think traders are going to be analyzing it. The Treasury had put together a panel, if you will, a committee to look into the ultra-long bonds, and what is it? They came up with what I was fearful could be. It's a great idea. I love the idea of borrowing long-term money. The problem is you can't go to auction on it very often because the committee doesn't think the appetite is going to be there for the depth of that market. You know, you have big depth in the 30-year bonds. Going to the 50, for example, is a whole different world, and what may work in Europe may not work here. Maybe it needs twists and turns in order to get more depth to it, but it did not sound good what came out of the committee. They recommended against it, in fact. If you look at the ETF TLT for the bonds, you're still very much in a downtrend. Or are you? I want you to take a look, and I leave this like that for a reason. Today's high, 122.39. What was the previous? 122.35. Therefore, the market stepped out of its downtrend. The swing line now is going to have a higher high. I'm going to have to take this arrow, flip it to the up, even though the market failed against the 18-day average of closes, which often is where a market runs to see what it's doing, and then it plays around. The other side of the coin is this is a very oversold market. So we'll see what it all does, but I think you stepped out of your trend today. The 10-year notes, can I make it any clearer? Remember what I told you, how often a market goes to the 18-day average to look to see what the next direction is going to be? It's exactly what this market did. It's traded against it now in a row. 1, 2, 3, 4, 5, 6, 7, 8, almost 2 full weeks, business weeks. So that's quite a bit of movement against it. I don't know what tomorrow's going to hold. You've had the swing line up, prices under the 18-day average. You have no trend. You've got momentum leading price to the downside. We'll see if there'll be any follow-through. What the Fed did today and what's impacting that and the dollar is they kept the June play for a rate hike very much on the table. They kept the language identical to, which is saying nothing about shrinking the balance sheet. They said that the first quarter, as weak as it was transitory. And haven't we said that on how many first quarters? If you go back over the past 3 years, they haven't been stellar, yet this market didn't care. If you go to it, you can see how the market started the year here, and it went higher. It's been backing off, and that's what I've been saying in markets, especially the dollar. People keep talking the dollar strength. I'm not buying that. But if the dollar moves higher here, which I think it will right now, because you've got the swing line pointing up, it's still under the 18-day average. I can't get bullish, can't get bearish. It's a nothing market that kept, at the end of the day, its embedded reading, but the last quotes of the day, you were far and away. You were at a 22 reading. Remember, they settle things different than they trade at the end of the day. In the June euro currency, you still have the embedded reading here, an outside day down. Until that high is taken out, you're starting to make a pattern here that could be a bit scary because these arrows are all going to switch around now. I'll show it to you tomorrow, but you're going to have the swing line pointing down, not up. You have the embedded reading, and you're over the 18-day average. Everything's fighting each other. What rules the day is the embedded reading. So even though this is pointing down, I'm looking for the pros to be buyers until you lose that red reading, and at that point, I'm looking for price in the 18-day average to come together. I said when it happens. Doesn't have to happen. You can keep that embedded reading and take prices even higher. Eventually, you do lose it. You lose all embedded readings at some point, and when it occurs, it depends where the market's at in price, you often go right back to that 18-day average of closes. I can take you and show it to you over and over. Does it have to get to the 18-day average? There are times it doesn't, but here you had an embedded reading, you lost it, and you went back to it. But there are times you don't. There are a few times that the two don't make a run at each other. In the British pound, well, the embedded reading, the market now with today's action, outside day down. I'm going to have to change these as well. Should have done a better job on this today. We're in a hurry to get it out because I have a meeting out of the office. But you've lost now in this market. The swing line's pointing down. 18-day average, you're over, and you have an embedded reading. I don't see a trend trade that makes sense there. I had been looking past tense for this market to get to the lower Bollinger Band, and you're just about there, as you can see. And you're knocking on the door of the 100-day average as well. This is where I'm looking for support to temporarily show up. That does not mean a trend change, just to show up. If you embed this reading, you can go even further down. The one thing I'm seeing is the yen is suddenly on a path of losing value to the U.S. dollar. Now, in the crude oil market, this market also settles at a different time than the last trades come in, and it was actually lower on the day at the end of the day, but doesn't mean anything. This market's got a problem in embedded readings, momentum down. It is not getting what it wanted to have in terms of the big drops in the gasoline stocks or crude. Didn't show up. You got a bit more draw on the distillates today out of the EIA than the API reports, but there was nothing friendly on that report in and of itself. You see that in gasoline. Look at how much this has come down. Normally gasoline goes up this time of the year. You're not getting that. The market that is trying to figure out a story for itself is the nat gas. Wouldn't surprise me that the market, as I've said before, tries to bottom here and put out that summertime rally that we often see in it. We'll see what happens over the next few days. I want to remind you about my research. So often I talk about others, but on mine, I'd like to give you a 20-day access trial to my written updates, my morning, have coffee with me as I call it. We're going to review 40 charts in a video that I record. I'm not in it like I am here. I talk with the headset on, bring up my charts, and really walk you through what I think the pros are doing, throw out all kinds of trade ideas to you. You need a user ID and password to get this because it's not available to the general public. So if you'd like to try this out and you haven't in the past, why not do it? What do you have to lose? You're going to get access to my oral updates, written updates, my videos. You're going to get Linn Group, Linn and Associates research, as we call it. And, of course, you can try our different charting programs for free. What does it cost? $0. I'd like to show you what we do. You get it by giving me a call at 866-973-2077. Go to my website. You can sign up for a trial there. right here you'll see what I do whenever I do this means on our website there's a carousel of free offers. Underneath us on a number of websites you will see click here for Ira's free offers. That'll open up the form for this as well as if you're watching on YouTube, look at the icon. We got quite a few viewers. Hope this has helped you. I'm behind on this one chart. I thought I had it up to date and I didn't. We'll catch them all on this video up for you tomorrow. Have a great day.